At the end of this, what do I always say? The markets hate uncertainty. Regardless of whether or not we had priced in 7 hikes going into this or not, whether we priced in 5, 6, 3, whatever you want to think about, I think the market had it priced in around 5. The market doesn't like uncertainty. So we needed to make sure exactly what the Fed was going to do and be very, very clear on how the Fed was thinking. And I think that Jay Powell did an incredible job messaging and signaling what we've known for months. I mean, how much more leading into this did you need to know? Now, obviously, there were some challenges around the geopolitical issues that are going on, humanitarian crisis, in addition to obviously an economic potential crisis. But ultimately, this is much better for stocks to know that we're at 25 pips here and that the Fed will use their flexibility as we move forward to obviously combat one of their focuses, which is price stability and inflation.
So it's interesting you use the word flexibility, Josh. Was it that flexible? Make no mistake, this was a hawkish Fed today. Was Jay Powell soothing the word of the moment? It appears in his news conference, perhaps. It's a hawkish Fed, which is why I ask whether we should really feel better or worse about stocks. How do you see it now that the Fed has spoken?
So normally these things are telegraphed well in advance, especially the first hike of a cycle. The Fed in recent years has gone out of its way to over-communicate when there would be some sort of a shift in policy. But this time really takes the cake. So much so, in fact, that the bond market had already done 7 rate hikes for the Fed in advance of us even getting to this place. I think most rational people about nine months, let's say, ago, were screaming for a taper of the asset purchasing. There was absolutely no benefit to having mortgage rates be 20% below their average. If the average price of a home was 20% above, of course, that's unsustainable. There were just a whole host of things along the way that told rational people that the Fed was behind. They should speed up. They should speed up. All right, fine. What's done is done. Now we're here. So now the Fed has to taper into essentially World War III, being a coin flip away. I don't think that that's what they wanted to do, but it is what it is. I don't think we've ever seen a Fed have to do this kind of thing. And when I say have to, I mean literally have no choice. At gunpoint, have to continue to raise rates into a situation where there could be a global conflagration on the ground on the continent of Europe. But that's where we are. So today's nice, up 500 points. The banks rallied, the FANGs rallied. I love it. You love it. But in reality, this is like a very suboptimal way to kick off a rate hike cycle.